Earlier this week, Transaction Capital entered into an agreement to sell its stake, 83%, in Bayport Financial Services to the management team. 1.33 billion rand is what they're paying. Grant Curlin, Chief Executive of Bayport Management, joins us on the line for a little more. Grant, today we had a trading update from Able. They operate in the unsecured lending market, which is where you guys operate. That share price has taken another tumble. People are saying Mark Lamberti sold at absolutely the right time.
Well, I think it is absolutely the right time for Transaction Capital and absolutely the right time for Bayport Management, Alex. We had no knowledge of this announcement coming from African Bank, obviously, in advance, but quite frankly, it doesn't impact in any way the decision made by Transaction Capital or ourselves. Bayport South Africa, which we are acquiring for 1.6 billion rand, Alex, we're acquiring 100% of the entity, is a high-quality asset that investors, shareholders, management and auditors are very comfortable with. And just to understand the comparison and difference to Able, we're a very small segment of the South African unsecured lending market, and we've had the luxury of not having to chase market share. Now, that's not a criticism of Able specifically, but it explains Bayport South Africa's continuous outperformance. So we're comfortable with the quality of the assets, and African Bank, we're not a proxy for the market, whereas African Bank probably is a bit more of a proxy stock.
Just give us an understanding of the relationship between your company in the UK and Bayport in South Africa. Obviously now it's going to be wholly owned, but in the past?
In the past, it's shared two principal commonalities, and that it was founded by the same management founding shareholders, i.e. Stuart Stone, my partner, and myself. We had common shareholders, but the two structures were always legally totally unrelated. And Bayport International went on a journey, and Bayport South Africa went on its own journey, which resulted in it being sold to Transaction Capital. So the two share common founders, a common ethos, obviously a common brand. And we're very excited about the prospects for a few reasons, which I'd like to elaborate on, of bringing those entities together. But historically, they have always been totally separate companies.
Grant, it's Gugu here. My question to you is with regard to the cost that you're paying for this company. I understand that you sold it for about 650 million rand back in 2010, but you're buying it back at a premium of 1.3 billion rand. Why?
Well, it's grown fantastically. Transaction Capital has been a wonderful custodian. They have invested significantly in building capacity in that business. So simply put, the earnings profile has tripled or quadrupled up in that period. The asset growth has gone from probably about 1 billion rand when we sold it to 5.5 billion rand today. And so that business has performed fantastically. And Transaction Capital, for their own strategic reasons, which Mark Lamberti has explained to the market very adequately, has decided it's the right time for them to sell. And Bayport Management Limited absolutely decided it was the right time for us to buy. We see this as a transformative transaction for what is a very successful market-leading provider of financial services in the emerging markets outside of South Africa. And we've done this deal to create some scale and size. We believe that the price is fair, that we've taken into account the South African macro and industry risks. We know this asset very well, obviously. We are part of the management team by extension of my partner Stuart Stone, who runs the South Africa business. And the transformation in terms of product capabilities and a fantastic management team with rich IP, which will add huge value to our emerging market journey, is not something that it takes a huge amount of intellect to extrapolate the benefits for our group. So from a size perspective, bringing the brand together perspective, and a product development and capacity, technology and IP perspective, this is a no-brainer for us.
Grant, it is interesting to notice that you've done well in the UK. Wonga, which is also South Africans who started it, have done well in the UK and stretching it back to South Africa as well. What is it about you guys, or what was it in the water that got you into this unsecured market, and now you're going and conquering Britain as well?
Well, truth be told, we don't operate in the UK, Alec. We have some resident capacity which helps to manage the business based out of the UK. But we actually don't operate in the UK, unlike Wonga, which is a very successful, well-known, somewhat controversial lending story. I think the question is really one around South African entrepreneurs and their ability to take skills that we've obviously learned in South Africa and extend those into other markets. I mean, South Africans are unbelievable entrepreneurs with great skill sets, especially in terms of managing volatile, change-orientated environments. But we are in Africa, north of South Africa, in Botswana and Uganda and Tanzania, Ghana, Mozambique, and we're also in Latin America. So we have taken our operating capabilities across cultures, geographies, across the sea, and it has been a very successful journey. I think it cuts to the fact that there are lots of richly talented South African immigrants who have left the country, and that they have had the luxury of a wonderful education upbringing and exposure to a fantastic business environment in South Africa.